Hi there, welcome to Kneppy Invest and welcome to another technical update video. It is the 25th of May 2025. Time is 11:23. I should have waited 2 minutes, so the time could be 11:25. A shortened version of the technical update video today because I won't be looking at any company-specific charts because I haven't gone through many at all. Haven't gone through many. I did include 5 potential charts to have a look at. Jumbo, People In, Findy, Collins Food, and also Step One. But I've decided just to exclude those companies and just go have a look at indices, commodities, bonds, crypto, and currency. Maybe what you're thinking right now is whether or not I survived the hike. The very fact that I'm recording this video and you're watching me on the Sunday, the day after I did the hike, is a pretty good indication that I did in fact survive a 39.7 kilometer hike with 2,087 meters of elevation gain. In fact, this time yesterday was around halfway mark. No, it would have been after the halfway mark. Anyway, so 9 hours and 30 minutes. My legs are feeling it this morning, particularly the thighs and glutes, but that's a good thing. That's a sign that they are adapting. I did get a little bit of cramps towards the end of the hike, which is an indication or a possible indication that I needed a little bit more, the hydrolytes in my drink. So that is something I have learned. And one of the reasons why I did this hike is just to learn what not to do or take and what to do and what to take on a long hike. And I did learn a fair bit, but I won't talk about that in this video. What I'll talk about in this video is charts, starting with indices. So we'll start off with the XJO. I think we're starting to see a little bit of toppish behavior happening with the XJO. Now we're right at the top of the trading range. That's first indication. Not the best of week. In fact, almost like a doji, not quite a perfect doji, but the XJO was only up 0.21% for the week. So I definitely think buy the dip mentality has come to an end. And over the last 5 or 6 weeks, we have seen the bulls easily beating the bears. But I do think the bears are becoming a little bit more confident. The Australian market is looking a little bit overvalued. And when I say a little bit, I'm saying a lot overvalued, particularly when you look at some of the bigger companies. I had a look at CBA and JB Hi-Fi, and those 2 companies have never been this expensive. And that is a little bit of concern that some of the big companies are looking quite expensive at these levels. So I'd say we're overvalued. But the other thing is, I'd also say we're pretty overbought. We've seen, this is the daily chart, we've seen a really good run. Now, I'm just going to have a look at the RSI. I don't think we would be considered completely overbought right now, but I have to use the right keyboard. But I wouldn't be surprised to see we are relatively overbought at these levels. Oh, yes, we are overbought. In fact, we've been skimming along the overbought line for a little bit. So I think we are due for a pullback. So overbought, looking a little bit toppish, doesn't look like it wants to roll over. And the other thing, one of the most important things happening right now is Trump is starting with he's going back to his Trump is going back to his tariff love, tariff obsession. So I did hear that he is wanting to put 25% tariffs on iPhones, and he's going hard after EU again with tariffs. He just loves tariffs. And I do think he's still market obsessed. And when he saw the market dropping like a rock, he was like, oh, what can I do? What can I do to fix this? Oh, I'll stop speaking about tariffs. And when the market has rallied, he's going, oh, I can speak about tariffs again. I can go on my tariff spiel again. Oh, it's great. So that's another reason why I do think we are looking a little bit toppish right now. And I do believe the market has really overreacted over the last few weeks. Very little fear. And that always concerns me because there's still a pretty high chance, maybe 50-50 chance, America moves into recession. A lot of the goods over there will be increasing. Chance, and Jay Diamond said it again, chance that might be moving, or America might be moving into stagflation environment. And that is the worst case scenario. Stagflation is the worst case scenario for everyone except maybe people who benefit from stagflation. Not sure who they are. Okay, so that's the XJO. Looks like it wants to turn around, looking a little bit toppish. XSO has been going sideways for the last few weeks. So down a little bit last week, up a little bit this week, and it's fallen short of the recent highs. Not my favorite indice again. So definitely this one is looking a little bit toppish. And we did see, I'm trying to remember if we did see a fair bit of a pullback in the American small caps, but we'll get to that in a second. But I don't see and envisage the XSO getting above 3,240 anytime soon. But if it does, that would be a pretty bullish move for the small caps. The reason I say that is because you can see the small caps reach around about 3,243 times in late 2024, early 2025, and failed to get above that level. And we're near that level right now. So it is in a resistance zone as we speak. Onto the XTL. Have a look at the weekly chart here. XTL shows a nice doji, almost a perfect doji, which means it opened and closed almost at the same price with a lot of in between. And in fact, the XTL was up 0.05% for the week, which tells us there was a bit of a fight between the bears and the bulls. And the bears had been losing, bulls had been winning, and maybe the bears are becoming a little bit more confident being bearish. And maybe, yeah, this is another sign of the buy the dip mentality coming to an end. Still a little bit off from the highs we did see in February. Yeah, February. So that's around about 4,800. So if we don't see the XTL get above 4,800, that actually would be a bearish move. Okay. Just have a quick look at the daily chart. I'm just trying to see if this is showing signs of maybe turning around. Yeah, I do think if we do see a negative week, this would be interesting. If we start to see it go down again, that would be a good sign that we have seen the top. And the very fact that the high at this point was not higher than February, that would be actually a fairly bearish move. So a lot of times at the start of a bear market, you see these rallies. You see these really good rallies. Buy the dip mentality is true and strong at the start of a bear market. So this could be just an indication of a nice bounce. Even though there's a lot of experts saying we're going to be entering a new bull market, another strong bull market, even though I also say a lot of these indices are probably overbought. No, overvalued. A lot of companies within these indices are overvalued. Just have a look at the ASX 20 and look at some of the companies within this indice, and they are overvalued, particularly those bigger companies. CBA, hello. X-Tech, or Tech. A daily chart here, possibly turning around. Not confident with that just yet. Again, it's shy of the highs we saw back in February, about 4,100. Have a look at the weekly chart. Better week for the tech than some of the other industries, up 1% for the week. So nice bounce for the tech. In fact, that's 1, 2, 3, 4, 5, 6, 7 weeks up in a row. You don't see that very often. Excuse me. Don't see that very often, although going back to the start of 2024, we did see that. So that actually was towards the start of that bull run. And we had 1, 2, 3, 4, 5, 6, 7, 8 weeks up in a row. I doubt you see many periods like that through history. So that's probably another sign that we are more towards the top of this little bounce or this rally than anything else, just because this is unusual. And also say the X-Tech probably is overbought. In fact, I'm going to put the RSI here. RSI. Yes, it's been overbought for a while, though. It can remain overbought for a long time. You can see back in end of 2024, it was overbought for about a month. And it kept going up, and then we did see it go down a bit. So that was just before the 10th of December when the all tech went down 3.55%. So just because something is overbought doesn't mean it can't keep on going up, but it just means the probability of it dropping soonish rather than late-ish is higher. And the same can be said when something's oversold. We can see the X-Tech was significantly oversold back in start of March and there was a small bounce, and then it became oversold again, and that's when we saw the really good bounce. On the day that it was the most oversold was the day we saw the very good bounce, but it wasn't because it was oversold that it bounced. It was because of Trump's change in tariffs. What was it? Yeah, it was a change in tariffs, and I still think the very fact that markets have been dropping, bonds have been rising, I think he was just freaking out, and that's what he can do when he freaks out. Banking sector, this is another one where I do think this little rally in the banking sector is coming to an end. You could even say and argue this is maybe looking like a head and shoulders pattern. There's a shoulder, head, maybe another shoulder if we do see it fall. And I'd also say the banking sector is probably the most overvalued sector in Australia. I would argue that if I was on a panel arguing which are the more expensive sectors, I'd say banks are the most expensive right now. It's interesting. I've heard some people say the reason why international funds are going into the Australian banks is because the perception they are safe, particularly CBA. It's a bigger, and I think the reason why they're doing that is because it's the bigger one. That's all they're doing. It's a bigger one. I'm going to CBA because it's the bigger bank. It's the safest. But again, if we go in a recession, CBA share price will drop a significant amount because banks are cyclical. Okay, so that's all I really want to talk about when it comes to the Australian indices. I think the main theme here is looking a little bit toppish for various reasons. I wouldn't be ultra bullish right now. I'd want to wait for some new highs before I became confident that we are going back into an uptrend or a bull cycle. I think there's also indications possibly that if we don't see the market rally further from here, that this could have been just a rally at the start of a bear market. I think that's a possibility that we can't ignore. Now on to New Zealand. And this is another one where we have seen some signs where this little rally has come to an end. It's starting to roll over. So this is actually even more significant, maybe not significant, but this is even more evident than the Australian indices. In fact, the New Zealand index, the NZX50, definitely nowhere near being overbought right now. So this is definitely, well, I shouldn't say definitely anymore. This is a sign that maybe the top has been reached on this rally. So that's the NZX50. Now onto the American indices. And by the way, New Zealand, the NZX50 was down 1.49% for the week. Now onto the Americans, and we'll start off with the NASDAQ. So overall, a fairly good week. Actually, no, that's the weekly chart. For some reason, I was thinking I was looking at the daily chart. Overall, a negative week, so down 2.39%. So the first negative week we've seen for a few. Last negative week was at the start of April. And if you do have a look at the daily chart, this is another chart that looks like it might be turning over. And it was overbought. Now it's just below the overbought area. So we have started to see a little bit of weakness creep into the NASDAQ. And this is another case where the NASDAQ did not get to an all-time high. It just fell short. And if we do see more weakness here, that would be a sign that at the very least, the uptrend is no longer in play. So the bull market, it's not there. Because in a bull market, you want to see new high highs, new high lows, that sort of thing. So after now, if we don't see a nice little rally in the NASDAQ, the next, I suppose, level we want to keep an eye on is around 17,000, which is a fair way down from here. But who knows which way it's going to move. If Trump becomes a little bit more bullish when it comes to tariffs, if he starts to threaten companies and countries with tariffs, then yeah, this could fall again, just like we saw back in March and start of April. Dow Jones looking fairly similar. This is actually even weaker than the Nasdaq. So for the week, Dow Jones down 2.47%. And the rally we saw in the Dow Jones was nowhere near as strong as the Nasdaq. So well short of the highs we saw back in February. So this is actually looking more like a bit of a bounce in the start of a bear market sort of scenario. And we're now starting to see possible weakness in the Dow Jones. Russell 2000, down 3.47% for the week. I did think the Russell 2000 had a weak week, and yeah, that's definitely true. And just like the Dow Jones, this is showing signs of turning around again, and the bounce is coming to an end. So the sentiment was probably a little bit positive. The other interesting thing was positive, and now it's maybe turning negative. The other interesting things I've read and listened to over the past week is how the retail the retail investors are the smart money right now because they're buying on this. Hello, no. That's not how you define smart and dumb money. In fact, I'd say in any sort of dead cat bounce, it's the dumb money who are buying, but we don't know if this is a dead cat bounce. We don't know that just yet. So you can't say, well, the retail money is really smart now because they're buying on this bounce. We just don't know that. If the institutions are selling on this bounce, you could say they may be the smart money, because if we see further downside, yeah, that's a smart thing to do. Sell on this bounce. So I have heard quite a few experts mention that, yeah, this is the start of a new rally. Everything's fine right now, and I don't think it is wise to just assume that everything is fine right now. Again, we just don't know what's going to happen in the future. Just look at the charts, and some of these charts are starting to turn around and starting to look touch negative. So we really want to see in these sort of charts, these sort of indices, we want to see the bounce. We want to see another bounce happening. We want to see a nice little bounce from this little down period, very short term down period, but we want to see that. The futures are down in America, but that's they closed just after they finished trading on Saturday morning our time, so no point looking at those. Now on to some international indices. Nikkei was actually down, down 1.57 for the week. So this is also turning around. Got back up to the levels, almost to those levels we saw before that tariff panic period, and starting to turn down again. In fact, this is still in a downtrend technically, based off this chart. So again, nothing overly positive with this chart. No reason to be overly bullish. Hang Seng's sort of the same. It has moved back towards the highs we saw back in March, but hasn't got quite back up to those levels just yet. Now onto the European indices, the DAX and the FTSE. So the DAX did get to an all-time high recently, and I just noticed it's down 1.54% on Friday. So interesting, a bit of a sell-off on Friday. Not sure what caused that. It was overbought. But you can see in that January and February, DAX was overbought every single day for about a 1 month period and just kept on going up just before it collapsed. So it is overbought again. Well, before that 1.54% drop, it was overbought just after it got to a new all-time high. Wonder if that's a trend killer. It doesn't look like a trend killer event. It's a little bit, no, it's not a trend killer event just yet, but a little bit more volatility in the DAX and the FTSE. Yeah, FTSE also really good bounce, but it got back up to the levels we saw prior to the tariff sell-off. And is this start of a new downtrend? It's struggling to get above the previous highs. That's the other thing. All these indices are struggling to get over the previous highs. So keeping an eye on that. And the TSX, the Toronto, was actually up a little bit. So does that mean we might be up on Monday? And the Toronto Stock Exchange also got to a new all-time high on Tuesday, and maybe showing signs of turning around. But I do prefer these sort of charts when the indice or the company got to a new all-time high before they started to go down, because it's a new all-time high, or long-term high at least. Okay, that's all I'm going to talk about when it comes to indices. I would not be overly bullish right now. Not be overly bullish. If I was overly bullish on anything, it'd probably be the Toronto Stock Exchange, the DAX, but some of the others are showing signs of maybe a little bit of weakness, at least in the next week, maybe even longer than that. Now onto commodities. Now we're seeing weakness in the indices, so I'm hoping we're seeing some strength in the gold. Now in saying that, I do know there's been a bit of strength in the gold. The last week, gold, in fact, is up 4.86% for the week. And if you do have a look at the daily chart, there was no reason to be exiting your gold positions, even though there was a little bit of weakness the previous few weeks. But we've started to see a bit of an upswing in the gold prices. But I'd like to see gold get above 3,500. That was the high we saw gold achieve back on the 22nd of April, 3,500.12. Almost exactly 3,500. So that is the important level for gold, getting above the highs, that previous high at 3,500. Silver still is looking more like it's going sideways than anything for silver. So the important level for silver is about $35. And that does look like it's an important level because the last 10 times that it got to $35, it fell away. So when it got to $35 in the end of March, it looked like it could have been breaking up, but then we had the two big down days on, what was it, the 3rd and the 7th, 4th of April. And it's rebounded nicely from there, but you could say and argue this is still in a bit of an uptrend, but it's a weak uptrend. It's not like gold. Gold is in a really strong uptrend. Silver, not so. And the only way I'd get bullish on silver right now is if it got above $35 and stayed above there for a few days. Now, copper had a really good day on Friday, 3.36% up. Not sure what caused that. And I want to see any sort of follow-on positive reaction over the next few days. So positive momentum moving forward for copper before I get excited about copper again. But a good day on Friday. So, yeah. But again, just like silver, I want to see it get to a new long-term high. Iron ore's dropped below $100. But again, there's no trend here. If there is a trend here, you might argue it's in a very weak downtrend. But I did hear someone say, oh, it's below $100 again. But it's been below $100 a lot in the past year. In fact, yeah, a lot. So just because it goes below $100 doesn't really mean anything. It's been doing that heaps. Uranium might be the most interesting chart on this list today. Okay, so uranium had a really good day because of Trump, uranium, nuclear power plants, some bullish behavior over there. So really good 2-day period for uranium, up 2.47%, then 7.55%. And probably the most important thing here is it's right on the downtrend line. So if we can break above this downtrend line, I'd be confirming that the downtrend has come to an end for uranium, and I would be looking and being a little bit more bullish on uranium. The other thing is uranium got above, this is the spot physical uranium. So this particular asset got above $23, which was the highs we saw back on the 13th of May. So it's possible signs of some bullish behavior when it comes to uranium. But we've seen this in the past. You can see these really good days. For instance, on 12th of November 2024, uranium was up 8.3%. In the 31st of December and the 2nd of January, uranium went on a 5.5% and 3.94% 2-day rally. And we have seen this in March as well. So uranium does go through these rallies. Well, we need to see a follow through. We don't want to see any weak days over the next few. That could be a sign that the uranium bounce and has coming to an end. The very fact uranium is right on the downtrend line, we need to see that broken. So that's the next thing I want to see, is that downtrend broken. So we're not there yet with uranium. In fact, if you did this the last few times and you bought when uranium prices got right on that downtrend line, you would have bought at the peak and saw the uranium prices go down from there. So we need confirmation. That's probably the best way to say it. We need confirmation that the downtrend has come to an end. I haven't got that just yet. Oil. Again, oil, it's at least it's above $60, but if anything, oil is in a downtrend. Can it go below $56, which is the most recent lows? Maybe, maybe not. But no reason to get overly excited about oil. Natural gas did have a really good day during the week. So that must have been on Thursday, yeah, up 8%. I did see that. So natural gas looks okay. Nothing wrong with this. No really strong uptrend. unlike it was before. There was actually a nice uptrend in natural gas from September through to March, but that has, or looks like it has come to an end. Lithium, we've got lithium weekly. No, nothing happening with lithium right now. Coal had a good Friday, up 3.71% for Friday and up 7.19% for the week. But still, coal is in a downtrend. Just because it has a nice little bounce, nice little rally, doesn't mean it is moving into an uptrend. But possibly the low has been reached, just possibly. Tin, nothing too exciting when it comes to tin. And I doubt anything's exciting about nickel. Palladium also had a really good day. I noticed this as well on Tuesday, up 3.95%. And then we've had Palladium come down the last 2 days. So this looked promising, but a little bit of pullback. Doesn't mean anything at this point, but I'd like to see the selling come to an end and Palladium going up above 1,050 and then eventually 1,100. If it does that, that will be looking fairly bullish for Palladium. And finally, cocoa down 4% on the last trading day on Friday. And cocoa, probably should stop looking at cocoa. Okay, now on to cryptocurrency. Okay, so Bitcoin, I'm pretty sure Bitcoin got above $110,000 during the week. It's now at $107,080. And oh, that's interesting. So it did get above 100 or get above this little resistance level at about 107,000 or just below that. It did get to and above 110,000 on Thursday and Friday. There was a big down day on Friday, so Bitcoin fell 3.95%. But it is testing this breakout level at about $107,000, and it hasn't fallen through this level the last few days. So that's a good sign. This is a good sign. So it's testing the breakout level, exactly what you want to see. But next, what I want to see with Bitcoin is I want to see it rally further and get above $112,000. So get to a new all-time high. Yes, Bitcoin is just off all-time highs. I'm assuming Ethereum looks okay. Yes, Ethereum looks pretty good here as well. Trend has turned. I'm calling this now an uptrend. The very fact Ethereum has now gone sideways for about almost 3 weeks is a good sign. Not a lot of selling. And I would imagine Ethereum is now moving into a nice sustainable, maybe not sustainable, but nice sustained medium-term uptrend. I think the odds are in your favor if you do go down that route right now. Okay, now on to bonds. 30-year bonds got above 5%. Got above 5% on Wednesday. In fact, the peak on that day was 5.1%. It has pulled back. In fact, it got to a peak of 5.15% on Thursday. It did hit the breakout level on Friday. So the breakout level is right on 5%. The low on that day was 4.9%, and then it bounced. So it looks like it has tested the breakout, which is exactly what you want to see. Now, just because it has tested it and sort of the test succeeded, doesn't mean that this is a confirmation of a breakout. I want to see a little bit more here. I want to see it get back above 5.15% before I'd be bullish on bond yields, which means I'll be bearish on bond prices. I just don't know how much further it can go up from here. But you got to listen to the bond market. You got to listen to the bond market. It's, once I said, bond yields higher. Australia 10-year bonds, by the way, bit of a difference here. So first time I've actually had a different look at the Australian 10-year bonds. This is just going sideways. It's been going sideways for a while. Been going sideways for almost 2 years. And finally, currency. Yes, Australian dollar had a good day on Friday, up 1.29%. I want to see Australian dollar get above 65 cents. That would be a really good bullish move. It looks like it wants to move upwards, wants to move into an uptrend. So yeah, hopefully it can do that. Hopefully it can get to the 70-cent range fairly soon. Okay, that's all I have for this technical update video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.